Good morning, everyone. How are you doing? Today is Thursday, March 1st, 2018, and I'm really glad to have you guys here. Now, the first thing we're going to do is we're going to start the charts right here, and we're going to take a look at the copper prices. I'm going to explain to you why we're taking a look at the copper price. If we see the copper price, if we go back in the chart and we go back to a little bit longer time frame here, go back a ways. Let's go back a little ways further. We see this march up here starting in around from $1.94 on January 11th, 2016. We see a march up all the way up to now, the present time, February of 2018. See this march up. This is the same march up we see in the stock market. That's because copper's a barometer. The irrational exuberance, the Trump rally, is reflected here in the copper price. Copper is not manipulated. It's a metal. It's an industrial metal like silver, but it's not manipulated in price. Now, the silver price is manipulated in price. So what are we looking at here? We're looking at $1.94 at the starting mark of January 11th, 2016. And we're looking at a run all the way up to a peak of $3.30. Okay, so what we're looking at here is roughly a 35% increase in the price of copper. Now, that same increase in the price of copper should have been reflected in the silver price. And the reason why is because copper is not manipulated, silver is. They're both industrial metals. The industrial use of silver should have seen the exact same rally that the industrial use of copper seen. So a 35% increase. The starting price of silver at the start of this rally was $17. Should have seen a 35% increase in the price, which should have put it up to around about $7. So 70, 80, 90, 20, 20. But it should have been about $24 right now for the price of silver. Okay? And what did we really see? We've seen a drop in the price from roughly $17 in the same time frame, down to what we see today right now of $16.20. So this shows a manipulation. This shows about an $7 or $8 manipulation downwards in the price. Okay, or so probably a 40% downward manipulation in the price. This is absolute proof of copper manipulation, price manipulation, right here in these prices it's reflected in today. So now, all these guys out there deny copper, not copper, but I mean silver price manipulation. All these guys out there who talk a big game and say, oh, there's no manipulation of the price of silver. It's reflected right in the price manipulation, right there, because copper's a terrific barometer. Now, what else can we learn about copper? We're looking at the copper price again right here. If we close in the chart a little bit here, and we move it up to right now, we can see this rally. Okay, here's our rally coming up. And now what we also see is, going back to around September 2017, we see the peaking of the wave, right? Copper is a canary in a coal mine. It is showing the peak in the stock markets ahead of everything else. It's showing that the stock markets are topping right now, and we're peaking, and everything's peaking. We're getting ready, and this is why the Chinese are doing their Belt and Road Initiative, which is basically a major infrastructure program that they are just funding with borrowed money, is because they realize the Chinese are on top of things. They're very intelligent. They realize that we are heading toward an economic slump, and they're trying to pull the whole world up out of this economic slump by infrastructure spending in their own country. And the whole world is being enlightened, and that's the driver of the world economy right now, is this future Belt and Road Initiative. Basically, we're getting ready to go into a deflationary event here. the world's economy, and I'm not so sure that the Belt and Road Initiative can even stop it, because on the same time we got the Belt and Road Initiative, we got the Chinese real estate bubble ready to burst. So it's like they're propping up one end of the world economy with their infrastructure spending programs, but at the same time they got a lame duck of a banking system, and also the real estate bubble there, which is the biggest real estate bubble in the earth, is trying to top out and burst at the same time. So they got a lot of things going on in China. And so this copper right here, this copper price you're seeing, is a barometer. And what it's showing is right here from February 21st until now, we see a drop in the copper price. This is just beginning, I think. I think this copper price is going to continue to drop. I think what we're heading toward is, at the end of March, the Fed should not do it's not the right time to do what they're doing. Him coming in gangbusters right now, the new Fed chairman, and deciding he's going to do 4 interest rate cuts and all of this kind of stuff. And he's going to continue with the reverse quantitative easing and everything. This is the wrong time for this. This is a very weak period right now. Even though we've had strength and we've had this little rally that you see here reflected in the copper price, the same rally, this Trump rally in the stock market. Okay? This is all on exuberance, all on hot money coming in. And this is just about over right now, and this whole thing is built up to a bubble. It's an enormous worldwide bubble. So let's take a look now at the Dow Jones today. We're down 100 points today. This is not really a good sign, because I wasn't really expecting it to drop this early. I mean, I'm not saying it's impossible that the boom can't drop this crash that I've been predicting in April. Well, heck, I mean, the whole thing could jump the gun on me, and it's not impossible for it to jump the gun and come sooner. I mean, because everything is in a bubble, just like I just showed you. It's getting ready to fall. The barometer of copper right there shows that the wave is crested and the whole thing's ready to crash. I mean, it could crash tomorrow morning. It could crash prematurely. But I'm just saying that I think it's going to slide in, kind of like a runner sliding into first base. I think it's going to slide in till the end of March. And it's going to hold until the end of March, and then our crash is going to come in April. And it's going to be a doozy of a crash, by the way, when it finally hits. This market, what we're seeing right here, 24,884. When it drops under 20,000, just what I just said, when the crash hits and it drops under 20,000, look for that 20,000 as the mark when the crypto market is going to turn. Okay, so when it first starts to drop, the Dow Jones, and it's dropping, and it's up, say, 23,000, but it's still dropping, the people in the cryptocurrency market are going to be HODLing. And the market's going to be holding its own. You know, and they'll say, "Hey, you know what? We told you so. We told you cryptocurrency was a safe haven asset." But then when the market drops below 20,000, when the crash really starts to intensify, there's going to be a first few sellers in the cryptocurrency market that's going to start to get scared. They're going to see the dollar going up, and they're going to see crypto is just hanging on. And they're going to start to sell. Big players are going to start to sell. And then we're going to see a sharp decline in the price of cryptocurrency when the Dow goes under 20,000. And then all of a sudden, everybody's going to start to jump on board and start to get out and want to be held in cash. And when that happens, you're going to see such a precipitous fall in the cryptocurrencies at that point. It's going to be scary, you know. But then it's going to be the same thing happening in the Dow at that particular time. And it's going to be scary when it actually comes. Because it's not going to stop it when it goes below 20,000. It's going to go down at 17, 18,000, 16,000, 15,000. And that's when the real fear is going to be in the guts of everybody, including the Fed. At a certain point, it's going to start to trigger the derivatives markets to start to pop. I mean, this whole thing's coming down. That's what I've been saying. The derivatives markets are going to melt down, and at that point, they're going to have to shut down the markets and everything's just going to freeze. Your banks are going to freeze. Everything's going to freeze. Yeah, and it's going to be panic for a lot of the population, because you're going to head in to try to use your card, your debit card, and it ain't going to work. Neither's your credit card going to work, and you're going to have to live on what cash you have at that particular point. And it's going to be a little bit of bedlam. People are going to be in places saying, well, I want to buy my pills. You know, they're going to be in the drugstore. I need my pills. And the thing is the drugstore, the pharmacist is going to say, well, we're only taking cash today. I'm sorry, but we only take cash today. And they're going to say, I haven't got any cash. And these people are going to be psychotic. Because if they don't get their pills, they're going to go psychotic. That's what's going to happen in these markets. And these markets, everything is tied in to finance today. You're just-in-time delivery. So you're going to go to your local pizza place and want to get a pizza, and they're going to say, well, we don't have any of those toppings today. That trucking company isn't working. They're tied into the bank, and they can't get their fuel for their trucks. And everything's going to start to actually shut down. That's when it's going to be all over the news. This crisis is going to be all over the news. Do you remember the last stock market thing we had there, 10% drop there a month ago? It was not even a story in the news. This time it's going to be the #1 story with a bullet. Because this is going to be a different animal. When it starts to affect everybody, so that they have to wake up and not watch their America's Got Talent anymore. They got to wake up and start smelling the roses and realize they can't use their debit card. Suddenly they're going to want to know, hey, you know, why can't I use my debit card? What in the hell's going on? You know? And this is going to wake them up, and they're all going to want, they're going to flood in. They're going to want to know what's going on. How this, and I got it all laid out for them over the months, the whole thing leading up to how this happened. Show after show after show that they can watch and see it coming and see the progression until when finally we go over the cliff. It's like I'm standing in the boat right now, and we're heading toward the rapids right now, and I can hear the rapids up ahead roaring. And I'm saying, hey, you know what? We're heading toward a bunch of rapids, you know? We're going to go over the falls. And all of these people are laying there in the boat go, you know? That's these people out there. Now, you guys aren't like that. You guys are waked up, and you're saying, hey, we can hear the rapids too, you know? And some of you give me information that I've never heard before. Because you're out there and you're filtering through information as well, and you guys know that this thing's coming. But the vast majority of these people out there, they're absolutely asleep. They don't have any silver. Honest to God, they don't have any silver. They don't have any cryptocurrencies. Everything is invested in the dollar. They're going to get taken by surprise by all of this, and they don't even have any bottled water in their house or anything. They don't have any cash put away for themselves. This thing's going to take them all by surprise when it hits. So anyway, what were we looking at here in the markets before I got into this rant? Cryptocurrency market capitalizations today. The cryptocurrency is actually doing pretty good right now, and I expect it to do pretty good right leading into even the first part of the stock market crash. When the cryptocurrency is going to really turn over is when the stock market starts to really fall precipitously. When the stock market goes down below 20,000, that's when I'm expecting the panic to enter into the cryptocurrency market. Silver price, this has been crushed. $6.19. It's just sickening to even look at that. It's almost ready to go down below $16 into the $15 territory, which is absolutely sick. I'll call it sick. U.S. 10-year Treasury, 2.84. What we see here is we see it peaking, and the yields fell to their lowest point. I should say yields fell to the highest point, and now they've just been going along at a level pace because it got priced in. I can almost tell you exactly where it got priced in here. More or less, it got priced in right about here. Right about here it was priced in when it made its peak at 2.9, around 2.94. That's when it got priced in. The February 21st, it got priced in, and now it's been priced in until they increase their quantitative tightening again at the end of March. The bonds are going to stay roughly priced in, and so this is why the markets aren't tumbling out of bed yet, really. Now, the U.S. dollar index, it's feeling it. The U.S. dollar index is feeling this impending deflation. It's sensing it ahead of time, just like copper. Just like copper is sensing it, this is a barometer right here as well. It's sensing it. And this is why the U.S. dollar's been creeping up. It was 89, say 89, around 89.5 or whatever, you know, and now look at it, 90.81. It's went up over a whole percentage point, which is not nothing really big, but it shows it's sensing it. It's feeling the deflation ahead of time. It's a barometer, see? So listen, anyway, this has been your market report for this morning. Thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye.